So I recently talked about how I invested in SoFi. This is going back into April. I bought SoFi around $10, and now it's trading around $24. And so a couple people had asked me, hey, how did you make this analysis? How do you value a stock? How do you take that value of a stock? You make that purchase, you put a lot of money into it, and then you get some type of return on it. And I think the easiest way to think through this, I think about this with my own business, my multiple businesses, and as my wife and I are about to purchase this multi-million-dollar property that we're going to be making a huge investment in, is that I like to think through a couple different factors around, one, what is a business model? So for my own self, personally, from our own businesses is, okay, if I spend this dollar, can I get multiple dollars in return from this investment? And two, how long is that going to take? Okay, so from a business perspective, it might be, if I invest $100,000 into some type of product that we're going to release and it takes a year to develop, within 3 to 5 years, could we get $3 to $5 back on that return minimum, right? So that we can just essentially survive and be stable. So I think about that as a business owner, and then I start to make those decisions moving forward with other areas. And I think that that's the one big factor here with investing, is establishing what that strategy is going to be and what the goal is. And once you establish your own strategy and what you want as an investor, and think through it in a long-term perspective, okay, think about, if I put in $1, will I get $2 to $3 back on this over the next 1 to 4 years, okay, minimum, right? Thinking 1 to 4 years and then going out from there. And lately I've been doing this model where I actually enjoy pretending, I believe, not even pretending, but I believe that the S&P 500 will hit 10,000, will hit the 10,000 mark in July of 2030, very likely, as far as my projections are concerned. And so what I end up doing is I work backwards from that point, and I think through investments currently, and then I start to make those investments moving forward with that end goal, with that end projection based off of year over year growth. Will we have some type of crazy event, crazy setback, crazy correction, and then moving forward off of that. Now, in the regards to SoFi, in regards to valuing this stock and making that decision back in April, and I want to point out that when I made those purchases, I was just inside of my Vanguard and I was looking through it, and during the month of from the end of March until May, middle of May, I was down like $25,000, so like 25,000 plus bucks, which isn't a lot, but it can make you uncomfortable. You're sitting there like, man, for 8 weeks, I was, that's a lot of money, 25, 30,000 bucks. Did I screw up? Did I make bad decisions? And really, I purchased things sooner than I probably should have. I wasn't really prepared for what was going to happen when Trumpsky released the tariff discussions. But bringing this back into light, I had made these decisions around AMD. I had made decisions around Google. I had made decisions around Nike. And I was starting to get antsy, right? And the big decisions were around SoFi. And the thing is that from the surface, and I want to get into some specifics with SoFi, but from the surface, I saw how Anthony Noto, the leadership, how he was trying to set things up. And some of the big factors for me was I had a decent understanding of his business model. Okay, so from that initial thought process, immediately is that he lays it out pretty clearly in various different discussions where he's talking about borrowing, saving, spending, investing, and protecting. Okay, so essentially borrow, save, and spend is like his one model, and then he's got his investment model, and then he's got his protection model, which would be insurances and things like this. And so if they have these different models and they have borrowing, okay, so they might give somebody like a refinance on a student loan, okay, or they might get somebody who's buying a home or something like this and they're trying to refinance. They will approve, they'll get these things moving forward, they'll get strong origination, okay? And then what they end up doing is they might actually sell some of the risky play around this to another bank, but they make income off of that. Their saving aspects, they'll have high yield savings, they'll have checking accounts, They'll have various deposit integrations that they're working with. So they see this savings as part of their company. And then they have their spending, which would be like debit, credit cards, refinancing high credit debt from like a 25% interest rate down to like 13% interest rates for him. Investing, they're setting up their brokerage. They've got their ETFs. They've got IRAs, and they're getting into. They're even now starting to talk about getting into crypto again and getting things going with crypto. So there's a pretty clear strategy as far as who's the leadership. Anthony Noto, is he good? Yes. And then on top of that, what is the business model? And then after that business model and you're analyzing what that business model, you can start to think through some things like, what are some of the key metrics then that you have to look at? And so when you start to look at things like their recent earnings call, okay, so you're going through their recent earnings call and you're looking at various aspects around, okay, what about their revenue growth? What about their membership growth? Because if we're looking at membership growth, it's immediately like, you understand their business model, then you take the business model and you say, okay, customers are their membership. So they make money off of customers. Are they getting more customers? How are they getting more customers? How well are they holding those customers? How are they creating more product growth? Is there, what type of platform are they using? What's their lending success? And then what are what's their fee-based revenue? So you start to think through these different aspects as far as what they're doing from their company perspective. And then you start to look at things from the earnings to make further decisions. And in the past, I've been a little bit more hesitant around SoFi specifically in that I didn't want to put a lot into the company. I forget, I think I have like 2,000 shares or something like that, maybe that I purchased back in April and May. And I wanted to see how things played out because I wasn't sure how high that they would be able to really capitalize on these things. And I wanted to make this decision like, okay, I'm sweating like crazy. If we looked at this and said, all right, now let's see where we are when they're around $20 and when they have, in this case, Q2 earnings report. So now we're tipping into early August of 25. We can analyze their earnings and we can see what type of earnings per share and how they're growing year over year, but also quarter over quarter. So now we can see momentum. We can see what the growth looks like and if there's an acceleration of growth. And then we can start to analyze from that financial aspect, what is their model? How de-risked is their model? And then on top of that, is there space where they would have a lot of potential growth? Okay, and so now I'm sort of at this second point of investment where I'm starting to see a couple of things. But first, before we make that decision on how much or when I will make that decision, I want to look at some real key factors. Okay, so if we look at earnings per share, adjusted earnings per share, it was expected in Q2 to be 6 cents. It was 8 cents per share. They beat by 2 cents. Okay, growth that was at 1 cent in Q2 of last year. Now it's at 8 cents. Okay, so that's a very, very strong signal. Okay, it's drastically up, especially year over year, but even from the previous freaking quarter, it's up quite a bit. Now, revenue growth, 858 million versus 840 of projection. Okay, they beat the expectation there. Year over year growth, 44% revenue growth year over year. Okay, so this is where people, and when you're looking at, I like to use Yahoo, I like to use tip ranks. When we're looking at these things, people are going to have to change their future guidance. They're going to have to change their price targets. And personally, that was the ticker for me to go, all right, I got to start thinking about this a little bit deeper because I'm looking at where AMD is going. I'm looking at where Google's going. I'm looking at, these side things. I've been hanging around with Adobe a little bit. I've been looking at Honest. I've been looking at PayPal and all these other things, but I need to start to think further into SoFi and make some decisions. Now, with loan originations, this is a key component behind their company, okay? So when we're looking at the volume, the loan volume strength, is that it's a really, really important strategy by selling loans. Okay, so they get these loan originations and then they sell them. So it sort of de-risks everything. And we're seeing personal loans for them. So we're looking at total $8.76 billion of loan originations. And this is 64% increase year over year. Personal loans up 66%. Student loans up nearly $1 billion at 35%. Home loans, 800 million up 92%. So this is really, really positive. And this is where I want to think through the aspect of people are starting to like student loans. They're starting to refi and do things with student loans, but it really hasn't taken off yet. Home loans are up 92% and no one is buying houses right now. Like, if you understand the housing market and their home loans are up 92%, and the Fed hasn't cut anything, now you have to start to think through this and go like, holy crap, what's going to happen when the Fed cuts? And that's going to have an impact on loan rates. And then what happens with something like SoFi? And remember, this is not their entire company. Their entire company is all based around multiple different things, okay? And we haven't even developed into that crypto aspect. Now, fee-based revenue, 72% growth year over year, which is huge. Okay, and this is sort of seen as like the strategic shift from bank to fintech. Okay, so now we're starting to see this reducing the risk here, and I think that this is like an interesting aspect around a structural change / evolution, is that we're going to see margins go up with lower volatility. And I think in the aspect of fee-based revenue here is that it reminds me, I would almost say it reminds me of like Airbnb, where Airbnb, instead of owning a hotel, renting the room from the hotel, taking care of the building, taking care of the hotel room, it's similar in that regard, in that now Airbnb just controls basically, it's a platform point for somebody to come in. They can rent their house out, where I'm staying in an Airbnb right now on a business trip. And that person, it's sort of the middle person here at a lower risk, okay? And it's pretty similar. The SoFi model is pretty similar as far as loan and things like this is concerned. Now with EBITDA, okay, adjusted EBITDA, 249 million versus 210 expected. The guidance raised to 960 million from 885 million. So I'm just going through this. This is just shows us like that financial turnaround momentum. Now, this is a big thing, is that we look at something like member growth. And I think that when I think through a company and in our own business, is that we've got to get as many people into our company through leads. And then you take a lead, an individual, and you try to get them to purchase, and you want to provide a product that can solve their issue, solve their problem. And that's a big thing, is that customers are the bloodline of your company. And in the case for SoFi, member growth is key. Okay, so now they have 11.7 million members, and that's up from 10.9 million members. So they added 800,000 members in one quarter. That's 3 million more year over year, 800,000 in a quarter. So this is a proof that like the product works, okay? The product works and people are starting to adopt this, and we're seeing a new model of a financial institution. And this is what I believe when I started to talk about, I have a video called Crypto's Going Mainstream. This model that SoFi is using, and I believe they are going to come out with a stable coin, and they're going to tokenize some, I even think they're going to get into some real deep stuff with tokenization of private investments, because Anthony Noto even mentions their private investments that they do with people and some of the real estate dealings. And I think that's where we're going to see with Clarity Act, with the Genius Act, all these things are going to come into play. Now with deposits, 29.5 billion up from 27.3 billion. That's strong inflow, supports their capital base and lending. Now the big thing here is that net interest income, 517 million versus 509 million. Okay, so decent growth, not crazy, but the big factor here is that this is a really important core banking metric, is that net interest income. Net interest income is big. Okay, it's big. It's big for stability, for that lending discipline. Okay, now loan platform fees 127. So they've had a loan platform fees. They've had a 10x increase. Other non-interest segments such as tech products, securitization services, all rising significantly, indicates success in fee-based diversification. So even when we're looking at the platforms changing, the macro is just delivering everything. And this isn't a time, think about this, is that people are still hesitant to bank this way. People are still hesitant that the market's not really, that we're not even in like a super powerful market. The VIX is still at a weird spot. Now, even looking at overall outlook for SoFi, we're seeing like a 50 to 70 forward PE, depending upon what type of bottom line growth we're seeing from the company. And then what I think will happen, because of the way Noto is talking through this, and he ended up going on CNBC. There's a on CNBC he had a SoFi. It's titled SoFi CEO Anthony Noto on Q2 earnings share surge and crypto strategy. He ends up going on there and he's talking through the borrow, the save, the spend, and the invest and the protect. And he's talking about the rule of 40. They smashed the rule of 40 at 73%, well above the rule of 40 threshold. They've got fee-based revenue dominance. It's 44%. So they have less balance sheet risk. They're looking at fintech identity over the banking identity. So now people aren't going to compare them to somebody like, let's say, Wells Fargo or something like that. And where I'm going with all this is that after hearing him speak and hearing him go through all of, just what he's thinking about through 28, 29, 30, and we're in 2025. And then talking about crypto, talking about the Clarity Act and the Genius Act and just what is being set up. I believe SoFi, a company like SoFi, is where we're going to see fiat meet digital currency. And it's going to be like this. These platforms are going to be built on this type of model. And I'm more and more personally bought into this. And I'm more bought into what's going to occur over the next months/years. And so I think there's going to be times where this stock is going to go down and up. I think it's been stable around $20 right now. I'm going to put more money into the stock. I think it's probably going to be an $80 to $100 stock in the next 3 years. And for my own decision-making process and what I see as far as, putting $1 in and what am I going to get per those dollars that I put in, how long will it take to get that return? I'm looking at this as, 28 to 30, so a 3 to 5 year return. And I think that that's the important aspect is like, we're still not seeing a lot of home loans out there. Okay, we're still not seeing a lot of homes even being built. We're still not seeing the crypto space really, it's starting to grow a lot, but it still hasn't even, the tokenization and the stablecoin stuff still hasn't really fleshed out. We got about 18 months before that occurs. And so I think a lot of this is where we're going to see, especially with their balance sheet, it's pretty healthy. And that's sort of how I like to think through these different things. Is I'm looking at the entire market as a whole, but then I'm looking at the industry that this company is in this case, SoFi, and then that's how I'm making these decision-making processes moving forward. And so I think it's important to factor all these things in as we're making those decisions. I just wanted to put this out there. And really, this was a drill for me as far as like, will I be putting more money into SoFi versus somebody like Honest, versus somebody like Adobe, versus somebody like AMD further because it's continuing to grow, versus someone like Google that just started to take off and now is creeping up to the $200 mark after it had been stagnant for a very, very long time. So this is a fun drill, and I like to think through all these things. I like to analyze all these things and to make those decisions so that we're in a good spot in a couple years. I hope this helps somebody out there. Until next time, peace.